How's everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I bring a very special guest and a good friend of mine, Mr. Paul Avery, who is an SBA lending specialist with a bank in the local PA market called Meridian Bank. I wanted to give everybody this weekend's kind of SBA update weekend, and I wanted to bring a special guest on, like I said, just to talk about the SBA programs so we could get a little bit more information on the type of loans that the SBA offers, what to expect in the loan process, different details, documents, how long it takes, that kind of thing. But we'll get into that. And I'm going to bring in Paul here real quick. So Paul, how are you doing today?
Doing great, Joe. Happy to be here. Thanks so much for having me.
Yes, thank you. Hey, thank you so much. I really appreciate you taking a few minutes to come on and talk with us. So I guess the first question here is, so just SBA programs in general, like can you just maybe take a quick run through? And I do have a spreadsheet that I'll bring in here in a second, but I don't know. Do you want to just do a run through of kind of the typical SBA programs that you deal with?
Yeah, absolutely. Really, when you think in SBA, a lot of bankers just use that term interchangeably, but there's really three main programs that the SBA and lenders like myself utilize. The first program is the SBA 504. This is a real estate purchase specific program, generally speaking. Usually banks are going to utilize it for, ongoing businesses which are purchasing real estate to relocate their primary operation. So if you have a small business owner, maybe it's a family-run manufacturing firm, they've been leasing space for the last 10, 15 years. They're finally at the point where they want to buy their permanent location and really establish roots at a specific spot. The 504 is a natural program for them. It allows them to utilize the leverage that the SBA provides, which is 90% on those type of transactions. Additionally, the SBA provides a very long-term below market fixed rate of 25 years in most instances for those type of loans, working with a local community bank or a local bank of your choosing. Additionally, there's this SBA 7A loan program, and then also the SBA Express loan program. These are loan programs which are used for much more general purposes. The 7A is probably the program and product that most people are familiar with when they hear SBA. It's a product I probably do more of today than I have at any other point in my career. It's used a lot of times for business acquisitions, sort of lower middle market and Main Street M&A type of transactions. Can also be used for debt refinances, can be used to purchase equipment, can be used to purchase real estate, and a number of other business related activities. And then additionally, there is the SBA Express program, which is used in a couple different ways. Our bank uses it primarily as a line of credit product. And usually it's done in conjunction with another loan facility. So for example, that same example I used earlier where you have the manufacturing firm purchasing real estate, our bank typically will provide them with a line of credit to go along with that term loan facility or mortgage facility to help with their ongoing working capital needs.
Perfect. No, sorry, go ahead.
No, I was simply going to say the Express program can also be used as a term loan product as well. It's typically in those instances used by some of the larger banks for very small loan requests that they do on occasion for various industries.
Now, I want to bring, while we're talking about this, so I have a spreadsheet. So this is called you could call it the quick loan guide. This is a spreadsheet you can get right on the SBA website at sba.gov. And it's a 2-page PDF, and it's a great document that I love to refer to all the time just because it runs down each of the SBA programs. So you have the 7A loan at the top, which, as Paul said, is basically the flagship loan program for SBA. And then they have like SBA, like 7A small loans. You go into SBA Express. Cap lines, which I'd like to ask you about in a second when we get into like Community Advantage, international trade, expert working capital program, Export Express, and then 504 loans. And then we got microloans at the bottom here. which we'll talk about that for a second. But if we could talk about cap lines for a second, Paul, I know that SBA has been, I guess they've rolled out some changes to the cap line program, or they're trying to push that for more use. Any kind of update on that?
Kind of, sort of. So a lot of the programs that you mentioned there are sort of sub programs within the three different buckets I described earlier. Cap lines is a good example of this. So the SBA is coming out with a new pilot program. It is out now, and banks are beginning to sign up for it, which is sort of a derivative of the cap line product that they currently have. What the cap line product is it's a larger line of credit program. So the line of credit program I mentioned previously has a maximum loan amount of $500,000.
Okay.
And for the vast majority of the borrowers that we're working with, that is a sufficient program for their purposes. However, if you have a larger manufacturer or exporter of some sort that needs access to a larger line of credit and they're unable to qualify for it through conventional means, the SBA has this cap line program, which allows them to qualify for a line of credit up to $5 million. It works like a typical asset-based line of credit that's backed up by the outstanding accounts receivable at any given time, and it's done on a formula basis, usually 80% of the available AR. The new working capital, the pilot program that the SBA is working on, is going to function in a very similar vein. The only difference is it's not going to have some of the export requirements that the cap line has, but it is both of them are exciting new products. Cap line doesn't get utilized enough, frankly, in my opinion. Typically, the reason for that's a multitude of reasons, but I would say primarily because most of the time, if you have a company that qualifies for a line of credit of that size, they're usually able to qualify for it conventionally, and banks are usually able to get comfortable enough with it via the conventional loan structure. But it is a great product for businesses that sort of fit within that narrow bandwidth.
Nice. So, and I want to spend probably the bulk of our time on 7A, but just real quick. So, the microloans, which are here at the bottom, those are basically loans up to 50,000. Is that something that your bank would do, or is that something that would go to more of like a specialty lender to do microloans?
Yeah, our bank doesn't participate in that program, and really it's just a staffing thing. In order to process those type of smaller loans, you need to be able to do them at a certain volume for it to make sense for the bank. Typically, we see those microloans done either by large banking institutions, or on the other side of the coin. For instance, in our area, Seedco PA, which is our local community development corporation, they're a lender within the microloan program. There are a lot of the various community development corporations across the country who are lenders in that microloan program. But the one thing I would encourage, and you might hear me echo this a few times in our conversation, you've heard me say it before in different panels and other settings. Anytime you have a question on any of this stuff, make sure you're speaking with your banker and then also with someone who is an SBA specialist and hearing what they can and can offer and what they advise and recommend you work on.
Oh, and that's great advice, Paul. Absolutely. And so just to add a little bit of context to everyone. So, and I can't say all areas, but most communities throughout the United States should have a CDC, a Community Development Corporation, probably somewhere close to them that works with a lot of banks, especially on like 504 loans. But like Paul said, they do get into the microloans and things of that nature. So, if you're in the market, you're looking for this type of loan, like Paul said, go find a lender at a bank that's an SBA specialist, but then ask them, hey, who's the local CDC that you work with? And they'll have that information. Like they'll be able to share with you, like who are some of the local organizations that you can work with to try to get things done, depending on what it is you're trying to do. So
yeah, I would say that is absolutely right. And the community development corporations all throughout the country do a fantastic job We have a close relationship with the folks over at Seedco PA.
Mhm.
They are the facilitator for that 504 loan program that we mentioned earlier. And in addition to some of these programs, they also have various grant programs that they work on as well. So it's a great resource for any small business owner out there.
Nice. That's fantastic. And then, so if we can now, Paul, I just wanted to spend a little bit of time on like 7A loans. And I figured that was probably a little bit easier to focus on because that's kind of the flagship product of the SBA. So could we talk a little bit about just some of the generalities, I guess, of the program? Like if you're going to get a loan, like what kind of documentation would you need? What's the typical process? Like how long does it generally take to get a 7A loan? So could you maybe just go through a couple of those things?
Yeah, absolutely. First, at a high level, just a quick explanation on the SBA 7A loan in general. The SBA is not a direct lender. The SBA provides what's known as a loan guarantee to cover a certain portion of the loan that gives banks the ability, the comfort, and the ability to make loans that they otherwise wouldn't be able to qualify for with conventional financing. So, for example, if you have a business which is purchasing another business, and the majority of that purchase is a goodwill asset, meaning essentially they're purchasing cash flow. A conventional bank may not be able to make that loan because there's no assets backing it up the vast majority of time. But the SBA loan program lends itself naturally to those type of transactions because the SBA will provide a guarantee on the loan up to 75% in most instances, in order for the bank to be able to make the loan and have that backing act as a sort of semi collateral basis.
Perfect.
With that said, the 7A loan program can be used for a multitude of reasons. We typically utilize it for some of the reasons I mentioned earlier: business acquisitions, equipment purchases, real estate purchases, debt refinances, and so on. The program does provide a guarantee to the banks from 75 to 90%. The turnaround time can vary pretty dramatically depending upon the type of transaction. The stock answer I give to most of my customers is typically it takes about 60 to 90 days from start to finish with our bank. Other banks may give you different parameters, but it's all going to vary upon what their process is and how quickly they move and the type of transaction it is. The maximum loan amount on these loans is $5 million, and that is a holistic maximum loan amount. So, for example, you can have multiple SBA loans as a small business owner, but if you have multiple, you're still going to have that $5 million max based on the gross amount outstanding at any given time. So, for example, if you have a loan A for $2 million, and then you're seeking a secondary loan that's going to be for $3.5 million, you would not be able to do so. You'd be limited to a $3 million loan amount on that secondary loan.
Gotcha. Okay. So let me ask you this: a couple things. If you have closing costs associated with the loan, are you able to roll those in to the loan amount, to the proceeds of the loan?
Yeah, great question. And yes is the answer. Typically, the way that we structure these loans is we will build out a loan budget. You're going to have your various line items, whether it's purchase real estate, purchase a business, refinance debt. If there's any additional working capital that would be paid out to the borrower at the time of settlement, we'll include that into the loan budget, as well as closing costs. So, for example, you might be buying a business or buying a piece of real estate for $1 million. Perhaps there's working capital of $100,000 that you're including into the loan, then total closing cost of $50,000. That would give you a total loan budget of $1.15 million. And then if the lender's providing you with a 90% loan based on that total loan budget, you can do the math from there.
No, fantastic. And then, so SBA loans generally are known for, like, there's a lot of paperwork. Like, you have to fill out a lot of paperwork. You got to do a lot of things. Do you generally help the customer with that paperwork especially at the beginning of the process there, when you come in and say, okay, we need a loan for this, and I'm sure you have your checklist, and you say, okay, we got to get X, Y, and Z. But is that something that you really try to kind of maybe hold the borrower's hand a little bit as you kind of guide them through that process?
We do, and I'll push back slightly on the paperwork thing because I hear a lot of that, and I think at one point in time that was true. The SBA has done a pretty good job over the last handful of years, minimizing the amount of extra documentation that goes into a loan. Really, for the customers that I work with, you know, we're looking for the same things that any other type of banker or conventional lender would want to see. We're going to want to see tax returns on the business and also the individual themselves. We're going to want to have them complete a personal financial statement. We will have them complete that on the SBA form, but it's the same information that you'd complete on any other bank form. Really, the only piece of additional documentation that is required during the application process is a form known as the SBA 1919 form. It's a very generic quasi-application form that we have our customers complete once we begin, underwriting and moving forward with a specific loan request. Perhaps it's easier for me to say just simply because this is what I do for a living. I do it every day, all day long. But I will always push back a little bit on that. Hey, SBA is so much extra paperwork, because it's really, it may have been true at one point, but it's really not the case anymore.
Well, no, and that's good to know. That's why we do this. That's why we have get this important information out there. Get rid of these misconceptions, as it were. So, okay. As far as the closing process goes, you have to get the loan approved. Do you guys, there's different banks have different designation as SBA. Like, some banks are preferred lenders, some banks are what you call like a CLP lender. Are you guys preferred? Are you guys CLP? Like, what's your current status with the SBA?
Yeah, we're a preferred lender. If you're doing any type of real volume as a bank, you almost have to be a preferred lender. And the reason for that is simply, as a preferred lender, you have the authority to approve and close on loans with your own bank decision-making process. You do not have to send the loan package to SBA for them to review and then approve on it. As you mentioned, CLP designation. You do have to do that. If you're a non-preferred lender, you have to actually send your loan package to the SBA. They will review it all, and they'll, 9 times out of 10, they'll approve it just like how the bank approves it. But you do lose a little bit of that autonomy and control as a bank in not only the process and timing, but also the actual approval decision making. As a preferred lender, we make a decision and approve a loan just like how we do any other type of conventional loan on our own. Additionally, we can set the pace and close the loan on our own timing, on our timing and our customers' timing, and not have to worry about the SBA interfering with that.
Oh, fantastic. So, all right. So the SBA has the loan approved. And now let's say you have to get an appraisal done. You have to get an environmental done. Do those reports have to be, like, in other words, say you get the reports back and say everything's fine. Say they're both clean. But do you have to get approval on those reports from the SBA as well?
Depends on the loan program that you're utilizing. So If you're utilizing the SBA 7A loan program and you're working with a preferred lender, the answer to that is no. That lender has the designated authority to review those appraisals, review those environmental reports, and be okay with it on their own. If you're not a preferred lender and you're utilizing a 7A loan, you do have to send those reports into the SBA as part of your loan package in order to actually receive the approval from SBA. Additionally, if you're working on a 504 loan, those appraisals and environmentals are reviewed directly by the SBA, whether or not you're preferred or not. In that situation, it doesn't make a difference. So on a 504 loan, you actually end up getting 4 different approvals on a 504 loan. 1, you get your bank approval. 2, you get your local community development corporation approval. 3, you then get another SBA approval. And then lastly, you get an approval on the appraisal and the environmental report for those 504 loans specifically.
Gotcha. And then the last thing on this is the closing. So when you get to the closing stage, does your bank, do you bring in like an attorney to do attorney prepared documents for the settlement, or are you guys still okay with kind of doing that with your own in-house closing people, or having somebody in-house that just prepares the documents?
So we do use outside counsel. And I will say most of the SBA lenders across the country utilize outside counsel as well. And it's done for a specific reason. One, it's done in order to ensure that all the documents are done in accordance with various SBA requirements. And then 2, more importantly, really, and this is somewhat getting to the weeds of SBA back office, in a situation where you have a loan that does default, the SBA and as a lender, if you go in and submit, borrower X has defaulted on their loan, the SBA provided a 75% guarantee on that loan. The lender has done everything they can to collect on the outstanding amount, but there's still going to be a balance that remains. You go ahead and submit to have the SBA honor their 75% guarantee. They are absolutely before they pay that out, they're absolutely going to do a review of the loan file to make sure that you stayed, within the parameters of the program, didn't do anything that would jeopardize the guarantee. And having an SBA specific outside counsel to work with you on those situations is very valuable for a bank to have. And that's more so than just the documentation standpoint. That's the reason why the vast majority of SBA lenders across the country will utilize outside counsel.
No, that's perfect. And I would just I guess I would kind of wrap up on this by just with a general comment, just saying that, the SBA offers a lot of great programs that enable banks to help borrowers get loans where perhaps otherwise they wouldn't be able to do it. They wouldn't be able to offer them the bank loan. And the 7A in particular is such a great program. It's been around for a long time. It enables somebody to buy a property with only basically 10% down. You can roll your closing costs into the loan. Again, people have complained over the years a little bit with it. They're not always in love with maybe some of the terms of the SBA loan or the amount of time it takes or the paperwork and that kind of thing. But it's basically it's a kind of a necessary evil. It is a great program that enables you to get from A to B when otherwise you couldn't get there. So if anybody has not either, I guess, read up on the SBA programs or isn't aware of them, hopefully they'll take a look at this video. Hopefully they'll reach out to you, Paul, and kind of try to get some more information on this, because there really are some great programs here that people can utilize, especially small business owners that really are trying to grow their business, but are maybe still in the younger years in their business. Maybe they've only been in business for 3, 4, 5 years, and they're still trying to get it all together. So
I would say it's really well said, Joe. And you took a line that I use a lot. I do posting on various social medias, particularly LinkedIn, and a line that I use all the time is that and I'm a true believer, the SBA program allows loans and deals to get done that otherwise wouldn't happen. And there are some things about the program that if I were king for a day, I would make some changes, as anyone else would. There's real downsides involved. But at the end of the day, what the SBA does allow for is for deals and loans to be made that otherwise just frankly wouldn't happen. And for that reason, I really am a true believer in the program.
God, I love it. Okay, couple questions here for you before we wrap up. I always ask these of every guest. So, do you have a favorite business book, and do you have a favorite business related movie?
I will be the first to admit, in my free time, I don't read a lot of business books. My wife, on the other hand, reads a ton of them. She will occasionally pass one across the nightstand to me and say, "Hey, you should give this a read." And I go, "Okay." The majority of what I read is typical historic nonfiction and other various items. I just got done reading the Springsteen biography.
Nice.
I got done reading a book called Paris 1919 about the negotiated diplomatic settlement of World War I. But I do have a couple of business books. Two books in particular were sort of changed the way I thought about, just sort of changed the paradigm of how I think about various things. I'm a big fan of Michael Lewis and a lot of his books. And Moneyball was the first one that I read. And that's not directly a business book, but it does go into a lot of business concepts, such as finding value in places where others aren't looking, and just making the most of limited resources. So I really sorry about that.
Oh, we got you right. No, that's okay.
Which was a story about ExxonMobil. Talked a lot about their history and how they became the company that they are today, but how they interacted with various governments and what their viewpoint on the global energy markets were. And then lastly, I will share with you a book that I give out occasionally at closings of mine to customers. It's a book called Minding the Store.
Yes. Okay.
All right. So you're familiar with it. So it's about a husband and wife duo who opened a small business, a small housewares shop in New York City. Talks about their peaks, their valleys, talks about just their overall experience as small business owners. They utilize the SBA programs on a number of different transactions, and it gives, talks about that process. And I find it just to be a really compelling book and story about the experience of husband and wife business owners.
Yeah. Oh no, I love it. That is a classic. Yeah, absolutely. Like, no, I've read, definitely a lot of good things about that book over the years. And I think Moneyball is great because I think it really shows that if you are coming from a kind of like a contrarian point of view, how it can be so difficult to kind of go against the norms, like go against the grain, so to speak, of like, how do you get things done when you're bringing in a totally new concept and people have never worked with that concept before. And so as a result, they are just absolutely dead set against it. They're not going to go along. They're not going to play nice. And you have to, sometimes you kind of have to, pull people along kicking and screaming to get them to see the value in what it is you're trying to do. But then once they see it, they're like, oh yeah, now we get it. And as you can see, like pretty much every baseball team, I think in the majors has an analytics department at this point. So yes, I mean, it's a great book. Interesting movie too. Good movie too. If you ever seen the movie. So, but yeah, no, that's great. And then, so just to wrap up today, Paul, if anybody wanted to get in touch with you, what would be the best way for them to do that?
I'm pretty active on LinkedIn, as you know about. So you can always feel free to look me up on LinkedIn and send me a message through that app. Additionally, I always say the best way to begin any type of process, just start with a phone call. Give me a call. Usually, I give all my customers my cell phone number, as most of us do nowadays. I'll provide for folks now, 717-350-5145. If you have anything that we could be helpful with, give me a call, send me a message, send me an email, which is on my LinkedIn page as well. And happy to start a conversation with anyone that we can help out.
Awesome. Thank you. Hey, I can't thank you enough, Paul. I really appreciate you coming on and just spending the few minutes with us to kind of go over all this. And I absolutely hope that you'll come back and talk to us more about SBA loans as, things new, updates come out or, things happen, changes with the program or just things going on in the economies that relates to SBA. But yeah, would love to have you back someday.
Sounds great, Joe. Anytime. Greatly appreciate it. And hope to see everyone soon.
Perfect. Thank you so much, Paul. All right, everybody. That was Paul Avery from Meridian Bank. He is a senior VP SBA lender with them, a SBA lending specialist. And we're so happy that he was able to come on and just talk to us a little bit about SBA lending today. I hope everybody enjoyed this episode. If you do, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. I will put a link in the description to the SBA PDF that we looked at throughout the episode, and I hope to see everybody soon. Check out some of the other content on the channel, and I will be back to everybody again real soon. Thanks a lot.